Both Brad and Fernando have questions. Fernando, technically you asked yours first, but I'm going to review this for Brad. Brad says, perhaps this might be better handled during a coaching session, but can you give a quick rule of thumb on the market sentiment? All right, Brad. The market sentiment tool we've covered several times over. I don't mean anything by that, Brad. We've covered several times over the past few months. And of course, because we need to, because it's very important and it's a very useful tool, I feel, as well. The market sentiment tool is a collection of 13 broad-based indicators that Ernie tested, and he started out with maybe 40 or 50 broad-based indicators, and looking historically over market trends was trying to figure out which broad-based market indicators really pointed consistently to a change in direction or a market direction one way or the other. Put call volume ratio, the number of days up for the SPX in a row, the gap of the SPX over the 20-day moving average, the percentage of stocks that are over their SMA 20. That just entered into a bearish mode. A lot of stocks running up. Stocks hitting their new 52-week high versus stocks hitting their new 52-week low. It's pushing towards bearish also. The VIX, it's actually been dropping. It's pushing towards bullish. The TRIN, okay, RSI of the SPX, number of stocks above the SMA 100, MACD gap, and more. All right. So for each one of these indicators, Brad, what we can do, and I mentioned Ernie, I'm sorry, started out, you're looking at the wrong screen. Go. And I need it to be clean. Just shows up better, right? There we go. Okay. All right. So when you have a certain number that hits the bearish or bullish, that's when you start to see the sell warnings appear. I think it's about 4 or 5 bearish indicators to neutral or bullish will start to show the sell warning. When we get to 7, I think it triggers the strong sell warning. We go back to the overall history here. This graph here kind of shows you, let's just isolate it to a little bit more recent times here. So the last time we really got into that bearish sell warning, oh, sorry, there we go. The last time we got into that bearish sell warning was right around, of course, the beginning of October. We went into that bearish sell, not the very bearish sell. We went into a bearish sell, and a couple weeks later, we did see the trend we wanted, but we didn't see a bullish buy. We saw that here. That was a light buy, and I actually opened a Mary put during this time that did well. Okay, so it had moved up there on the bearish sell. So that's when these are triggered. The last very bearish sell, of course, oh, no, it wasn't. It was before that. So let's extend it a little bit more so you can see that, Brad. You can see the strong bulls coming up here. There you go. There's the very bullish buy that happened. Okay, so the big ones, obviously, Brad, that you can see. We started to hit the sell warnings right around end of January, beginning of February. Sell warning and the bearish sell warning didn't quite hit very bearish sell. And the market was peaking, and then we had this. Of course, that's when the buys started to come in. Right here. Okay, so we hit a peak here, and we got the very bearish sell right around the same time. Of course, that happened. Went to the neutral phase for a little bit. Right about here, 3 to 4 weeks before, is when we started seeing the bearish sells again. Right around in August. And as you remember, September was about 3 to 4 weeks of a gradual turn down. Okay, and then at that trigger, we saw the light buy, got what we wanted, the light sell. It's not really lagging. It's indicating when you hit the tops, when those criteria start hitting their tops, the number of days the SPX is up, number of stocks hitting their 52-week high, gap above the MACD. When it starts going to the top, that's when you start expecting it to pull back, and it starts triggering those sell warnings. Okay, and that's what we saw there. And we saw the light bullish buy here, which was right, but then we started getting back up in the peak. That's when we started seeing the sell warnings again. A nice little sell-off there from October to November, going up here as well. And we're starting to get into that sell warning. Haven't really hit the bearish sell yet as well. Normally what I see in these conditions, this was a decent light buy warning. I did end up buying one Mary put. I could have been more aggressive, and I should have been. Normally, and this is I'll point you to another webinar real soon, Brad. But normally, when I see 2 or 3, and this was 2 or 3 in a row, but when I see 2 or 3 of the sell warnings in a row, 2 or 3 of the bearish sells in a row, right after a sell warning, I'm usually considering closing my bull put credit spreads that have a profit. selling calls or rolling up the put on my married put positions to get a lower risk, anticipating a decline. It might not happen the first day, it might not happen the second day, but consistently we see it happen within a couple of weeks. It's not really pointing to how long of an expected downturn you should expect. It's giving you a warning that the market is extended, that these broad-based indicators that have worked for us, that Ernie tested and have worked for us for many years in different situations, have pointed us to a need for protection. Maybe buying puts on SPY to protect a broader portfolio, Brad. Let's see here. I'm going to go back as far as, I'm sorry, there they were. The bearish sell warnings on 10.12, 10.9, and 10.8. So right about here. Would help if I had my marker on me, wouldn't it? Last time the bearish sells came up right around 10.8, 10.9, 10.10, right in this range, and there we go. The September ones, let's go back a little bit more. We're going to get there. There's your light buy. And before then, let's keep going. There they were. Oh, it was in August. Yeah, 8.24, 8.25, 8.26. 3 bearish sells in a row after the sell warnings. Where would we have been? Oh, right here. You know, still went bullish into September, but then 3 to 4 weeks of a downturn with some hiccups there in September as well. So when I see those bearish sells, when I see 3 or 4 in a row, after seeing sell warning, usually 2 or 3 in a row after seeing the sell warnings, that's when I'm considering maybe adjusting my bull puts, maybe not trading bull puts for the next cycle if I'm coming into a new cycle, rolling my married put positions to lower the risk and to get a better position, get a better controlled risk, or bulletproof the positions with the married put trade. I have 2 bulletproof trades on right now with JD and Kraft going on right now, and a new position on DAR. The new position on DAR is what I opened right here when I saw that light buy. That's roughly when I went into the DAR position. Excuse me, married put. Need a drink of water there real quick. Now, so that's how we use it. And there's other examples of going back that the last big bearish sell warnings that we saw happened on January 21st, 22nd, 23rd, and 25th, 2018. What happened next? Volatility crash from February 5th to 9th. Could it have predicted the trade war discussion that happened then? No, but the market was extended. And something was going on there that was pointing to a downturn, and we saw a fast downturn, that February 5th through 9th volatility spike as well. It did trigger in January of 2020, and I believe into the first week of February. There were sell warnings there. What do we remember happened from February 20th to March 25th, or maybe it was February 25th to March 20th, I think, of 2020. We know what happened, okay? So that's what we kind of look for in these indicators. And that's how it's done there. Let's go back to home. Let's go to free webinars for you. Here you go. From 8/24/2020. This one, we look at some of the 13 indicators that are used in the market sentiment tools, plus the new graph. There's some further discussion on it as well. I don't know if there's another one right here, but that's a video you can look at. Just go to powerop.com/webinars.asp. You'll be able to see some information there as well. Also, I don't think I have anything in the strategies or the concepts. Study trades prior to the election. Hedges on a large port. These are all good too. These are ideas you might want to consider when you see the trigger hit. Hedging leverage positions in your portfolio. How to hedge your portfolio with broad market put options. Buying VIX calls. That's from February as well. So yeah, that one there is just in the Power Options tools. A look at the market sentiment tool is a good one to start. We have other ones also on YouTube. You can just look up market sentiment, Brad, on the YouTube channel and they'll show. Okay, Roger had to leave. Roger, I'm sorry. He says, I enjoy Friday Talks. Thank you. Hope you have a great Thanksgiving. Thank you as well. Just want to remind everyone, while I'm waiting to see if any last minute questions come in, I apologize for that. Today's material are my thoughts on your questions, designed for educational purposes, increasing investing performance, and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions. We saw some of the covered calls and naked puts and bull put credit spreads that came up in our searching today with our examples for Alberto and our examples for William. Doesn't mean I'm going to go ahead and jump into those positions, or I'm suggesting that those trades, or you still want to do your due diligence. Hey, Power Options is a great tool for that as well. course, options do involve risk. We talked about that a little bit with the naked puts, and may not be suitable for all investors as well. All right. Now, if you liked what you saw today with the capability of the search tools for the naked puts or the bull put credit spreads, you might be watching one webinar or the other, of course, but you can test these tools out and have access to the back testing tools that we showcased a little bit today too for our bull put credit spreads. Simply go to PowerOp.com, put in your name and email address, and you'll have full access to PowerOptions for 14 days. No credit card information is required. You'll have access to the full capability of the search tool, research and analysis, the signature tools, the back testing, the portfolio tools, which we didn't look like at that, for tracking and managing the position, and much more as well. Okay, as well. Oh, sorry about that. After that, subscription started only $45 per month. The most common and popular subscription is $65 per month for the delayed data, but we do offer a real-time service, and the full historical data is available as an upgrade to either the 20-minute delayed or the real-time as well. In the demo and in the trial, you saw about 3 months of access to the back testing. It goes back several years on the historical subscription as well. Now, other free stuff available, as we mentioned, of course, you can view our archived webinars at any time. Just go to powerop.com/webinars.asp, go through the different categories, tools, options, strategies, options, concepts, and more. And then, of course, you can also go to YouTube. Most of our videos are published for the public in YouTube as well. So you can go to our Power Options YouTube channel and just scroll through some of the various videos there as well. Okay, we did have another question come in, so I'm going to take a look at it real quick. But if you do think of any other questions at any time, remember, just send me an email to support@powerop.com or support@radioactivetrading.com. Trial members and subscribers can schedule a free coaching session. Kip did ask, there's 2 questions that came in. Kip did ask this question. So how do we get through next week without a session? You're going to see videos next week. I'll be posting videos likely next week based on coaching session discussions and other things, just to keep it fresh and live. But yes, next Friday, we will not be having our 4:30 session here, Kip. I apologize for that. But you will still see information for me as well.